What's up YouTube? Welcome back to Investing Club, and it's Saturday. So today I'll be going over the stocks that were most requested in my Discord chat. So if there's a stock you want me to talk about next Saturday, join the Discord and mention the stock there. That's where I'll be reading everyone's comments, and whichever one gets the most mentions and likes, that's the stock I will cover. So for this week, there's a lot of talk about solar stocks in the Discord. So that's what I'll be going over. I'll be going over solar stocks as an industry, and then I'll point out a couple that I think could make a good buy right now. So we're on Finviz, and here is the list of all of the solar stocks. And for the most part, a lot of these stocks have high PE ratios or they're not profitable, but they're trading at valuations that don't really make a lot of sense. Again, mostly because these are thought of as high growth stocks, and a lot of investors in these stocks don't care about the fundamentals. But in this video, I'll talk about a couple stocks that I actually think could make a good buy right now, and I'll explain to you why. Before we start, this isn't financial advice. I'm not a financial advisor, and always do your own research. The first stock I'll talk about is Enphase Energy. Their ticker's ENPH, and this is probably one of the most hyped up solar stocks out there. So there's quite a few things I actually like about this company. The first one is their margins are huge. Their profit margins, 31%. That's something you're not going to find in a lot of industries. And their return on equity is over 100%. So this is a company that is very fast growing, and they know how to use what they have to generate more and more profits. And that's always a good sign for a company that's growing as fast as Enphase is, because that'll help them keep up with the growth in their industry. Now, another thing I like is that their debt isn't too extreme. Their debt to equity is a 1.25, so definitely not the worst. And their current ratio is over a 3, so they are in a very good position short term, and long term they should be more than fine covering that debt. And in terms of the valuation, their forward PE is a 38, so I don't know if this company is overvalued. It depends on really how you value it, but from what I see, they're definitely not undervalued. So I would say this company is definitely growing fast, and they're definitely not in bubble territory. They are trading at a reasonable valuation given the hype for this sector. So I think if you bought here and held long term, there could be potential for some pretty good returns. So the stock is at $60 right now. Back at the beginning of this year, the stock was at just under $30. In my opinion, that's where I would be much more comfortable buying into this company at around $30 rather than the $60 where it is today. So we'll come over to Guru Focus to take a look at how this company is doing. And I think the big thing to point out with Enphase is their margins, and again, their returns on equity and returns on assets. So we can take a look right here in the middle, and versus the industry, versus the solar industry, their margins and their returns are higher than most of their other competitors. So I think this company definitely has some sort of competitive advantage, and that's reflected in these numbers and how much better they're doing than their competitors. The second solar stock we're talking about is Canadian Solar, ticker CSIQ. In my opinion, this is the most undervalued solar stock out there right now. So this company is pretty profitable, but the valuations are on a whole different level compared to a company like Enphase. Their forward PE is only a 7.6. So in my opinion, this company is trading at a very modest valuation compared to its competitors that are at 30 PEs, 40 PEs, and some that are all the way up to over 100, and a lot of that aren't even profitable. Over the next 5 years, they are expected to grow at 20% a year, and even though their profit margins are only 5%, so they're not as good as Enphase, they do have a pretty good return on equity of around 13%. So to be honest, I'm not really sure why this company is valued so cheaply right now, especially compared to its competitors. You know, a 7 PE is cheap for pretty much any company, let alone a company in a futuristic high growth industry like solar. So to me, if there was any solar stock I would buy right now, it would probably be this one because of the valuation. We can take a look at the monthly time frame, and the highest this stock got was just under $45. Right now they're sitting at 23. So I think potentially this could be a pretty good time to buy into the stock. It looks like they've been consolidating for the past couple of years, but I think if this stock starts to be valued like its competitors, we could see it go up a lot in price. Now maybe there's something I'm missing with this company that's keeping its valuation down. I'd love to know what it is. If I am missing something, let me know in the comments. But otherwise, I really don't see a reason why the stock is trading this cheaply. So again, we can see that the margins and returns on equity and assets are among the best in the industry for Canadian Solar. And in terms of valuation, we can look at the valuation rank. And in terms of the industry, this is pretty much the most undervalued solar stock, no matter which way you look at it. You can look at PE, you can look at price to sales, price to book, enterprise value, pretty much any metric, this is going to show up as the most undervalued solar stock. And so unless there's something horribly wrong with this company that I'm not aware of, this seems like a pretty good solar stock to buy right now. So this last solar stock I'll be talking about is probably the most speculative one out of the three, but I also think it's the one that could provide the most upside if things go right for this company. So the company is Sunworks, their ticker is SUNW, and the stock is at 90 cents right now. So this is a penny stock, so there's a high chance it will be very volatile. This company is currently not profitable, but what I do like about them is they have a very conservative debt level. So we can look at their long-term debt. They have no long-term debt, and their debt to equity is only a 0.23. So I think while this company is not making any money at the moment, This gives them a lot of breathing room in terms of growing and reinvesting into their business without having to worry about a huge debt pile to pay back. Like a lot of their other competitors that are really loaded up on debt, Sunworks has the potential to take whatever money they can make and put it right back into the business that will help them grow a lot faster than a lot of their other competitors. And the story with the stock is they've been going down pretty consistently since 2015, where they hit a high of $60, believe it or not. Now they're trading at under a dollar. So not really sure what caused that to happen. But in my opinion, this looks like it could be the bottom of this stock before they start to go up again. With the low debt levels, I don't really think there's any possibility of them defaulting or going out of business. So from what I see, it looks a lot more likely that in the next few years they'll be going up compared to still going down, because there's not really much lower they can go if you ask me. Not really much to talk about in terms of financial strength, profitability. Obviously they're not profitable. Their financial strength is pretty good in terms of their debt level, and their valuation is pretty good from what you can compare them to. Their price to sales is extremely low. So on a revenue basis, this company is cheaply valued. So in my opinion, just depends if you want to take on some risk with this stock. If you ask me which solar stock has the potential for the greatest returns 5 years from now, I'd probably say this stock. If you ask me what I think the most undervalued solar stock is, I think it's definitely Canadian Solar, and I think Enphase is the most highest quality company, but they're at a price I probably wouldn't pay for them. Now that could differ for you if you are really someone who believes in the company. So that's it for this video. Those are the 3 solar stocks I wanted to talk about. Let me know what you think. Let me know if you own any of them and what your thoughts are on how they will perform for the next couple of years. If there's a stock you want me to analyze next Saturday, join the Discord, put it in the chat, and I'm also on that Discord pretty much every day, so I'll also be answering any questions you have. So that's it for this video. If you liked it, hit the like button, subscribe to the channel if you haven't already, and I'll see you on the next one.